This is the Bank Nifty daily charts. As you can see, a red candle formed, but it still created a higher low. Even though it didn't break the high, it created a higher low and actually closed higher than yesterday's closing. So let me take you to today. What happened today is weekly expiry. It's an interesting day. So yesterday we had a zone which I didn't mark, which was here, that was created in the second half of yesterday's trading session. So we had a zone here. Market had closed here. Market closed yesterday at 37,521 and today opened up 37,894, 500, 400 odd points higher, essentially taking almost the zone out that was there in the morning. And what we were looking at trying to figure out is whether this gap will get covered, because like I said, there's one gap here around the 1st of October and there's another gap here, and the market's taking these levels, 37,400 support levels, to kind of bounce back up from there. So wanted to see whether this gap will get covered, especially because there was mixed signals in terms of news that was coming along yesterday. Um, so straddle yesterday closed at 929. IVs were very high, around 22, 23 or so. And today straddle opened up at 844. So there was considerable overnight decay, and therefore this move upwards didn't hurt us as much as a 400, 500 point move would usually hurt us. So we were relatively covered. We didn't really do anything. We waited to try and see whether these gaps will get covered. We were delta negative, and with this move, we became even further so. So around here, when it started coming down, we made slight adjustments, not too much, because we have, again, we are trading for 14th expiry or next week's expiry. So the premium range was such that we were getting 1800, 1900 point spread. So we didn't want to kind of keep tinkering with that to reduce our premiums. Option chain around 1130 or so, right, which is around here, was calls were written at 38,000, puts were written at 37.5, and change in open interest for the calls was at 37.8, markets around 37.7 around this time, and the puts were also 37.8. So it looked like the market may be between 37.5 and 38 on the outer side, and be in the 37, 38, 39 range through the day. So because the market was giving indications of being flat, we really didn't want to do too much. And again, what studies suggest that Fridays typically the market will open around 650 ish levels. So if yesterday market closed at 929, there was considerable decay between today and tomorrow to get those levels in place. So we didn't want to do too much. There is RBI news tomorrow. That's one of the reasons why the premiums were held. But overall, the market was flat, so we didn't really figure out great opportunities to keep adding on to our positions. What we noticed was around 1130 or so, the straddle was 830. It started off at 844. By about 130 or so, which is here, the straddle had come down to 801. Now, in our heads, we were thinking it'll close 700 or so, and tomorrow it'll open up 650. But because of the RBI, the premiums have been held, and the market closed at 786. Now, our plan for tomorrow is simple, right? The market's been range bound, even though this zone is technically out. This is a place where the market's been moving. You can see that here, big candle, 50%. So around 37,900 is an interesting level because the market stayed range bound between 700 and 900 today, right? You can see it staying within this throughout the day, and we've got this sort of zone around 37,500. Keep this here. So we've got a support around 37,500 on the outside. So our plan is to see what happens tomorrow. What if this starts breaking down, will it reach 37,500, or if this starts sort of breaking out from here, will it reach 38,100? So that's kind of what we're looking at. In terms of global cues, again, there's a lot of mixed signals, right? Like tomorrow RBI, so we don't know what that is. Overall, global markets are looking fairly strong, but there's a lot of sort of gaps which is needed to be covered. So it's an interesting day again. It can go up, break this, and work around. So the opening of tomorrow will be interesting, and what happens in the RBI announcement, because after that there'll be considerable premium decay that will kick in. So till then, I think the decay will be held. So we have to hold our positions, be ready for that announcements to happen, see the impact of that, adjust positions so we can end our week in profit.